Hi everyone. Today we are again with Mahendra Singh Rohan from Primerica, and we will discuss about a very interesting topic today. It's RRSP loans, and we will cover to whom this RRSP could benefit and what audience should be here with us today to get a better knowledge of RRSP, how it works, and how RRSP at the end can help you. So Mahendra, how are you today?
Awesome, Alex. Thank you again for inviting me for our I think our fourth podcast.
Great, thank you. I'm looking forward to hear from you. Amazing RSP topic today, and hoping that people benefit and find it very helpful to them. So let's start
Absolutely.
and come on the board.
Absolutely. So again, welcome everyone to our podcast, and I must say happy holidays.
Of
Hope you
course.
all enjoyed your Christmas and your Boxing Day. All right, and we're gonna get right into our topic here. I think the focus group today, Alex, would be first-time home buyers and investors, people who are
Great.
looking to build a portfolio with RRSP by
Mm-hmm.
using the RRSP loan, and
Yes.
also on the other side, folks who are looking to just use the RSP as a means of buying their first property, right?
Oh, nice, nice,
All
nice.
right, so that's
Great.
what we're going to focus on. To begin, I would like to share a few basic slides
Mm-hmm.
on the RRSP, a little bit of the concept and how the loan actually works. So
Mm-hmm.
let's get right into that. All right,
Yes.
I'm just
Mm-hmm.
gonna share my screen. Just to confirm, you can see my screen,
Yes,
right?
I can. Yes, I can.
Okay, great. All right. So in Canada, they say you have the four seasons, but there's also a fifth one. It's called the RRSP season, right?
Yes.
And the RRSP season is used by families who are looking to maximize on their tax credit in most cases. And like I said, also buying their first property. And it's a very, very, very smart way when it comes to reducing your tax liabilities. Okay. And I
Yes.
don't know of anyone who says, hey, I want to pay more taxes to the CRA,
Of course,
right?
nobody likes that. I agree.
And of course, what I'm showing you today is not tax avoidance, just to be clear. That's a criminal offense. It's tax minimization, okay?
Yes, of course.
So basically, the structure of our program, what it does for folks is as you increase your amount of registered retirement savings plan in terms of contribution, whether it's on a monthly basis or whether it's a lump sum at the end of the year, what it does is it brings your taxes down. And the reason that happens, Alex, is when you contribute to an RRSP, how it works is, let us say you have a let's say you have a total income of 80,000 and
Mm-hmm.
you have an RRSP contribution, which is from an RRSP loan, by the way, let's say
Mm-hmm.
$20,000, right?
Yes.
That reduces your taxable income to 60,000.
Yes.
So
Of
now
course.
that person would have paid taxes on throughout the year that they've worked for their employer, they would have paid taxes on 80,000 of income.
Yeah.
But the fact that we're reducing the taxable income to 60,000, they're getting back at a marginal tax rate, they're getting back the taxes they would have paid on 20,000 of income.
I see.
So that's where this program does wonders for families and it has a triplicate of benefits. Okay. Um, so how it works, let's put some numbers on the table. Now we do know, interest rates have gone to an unfavorable, amount,
Yeah.
and we have no control over what the government does. But let us say at an 8% interest rate right now, you have a $20,000 RSP loan,
Yes.
and that would bring you in the ballpark of about $246 a month if you do a 10-year amortization.
Mm-hmm.
Okay. Now, a couple of things. There's a strategy when it comes to taking an RSP loan. Most people would say, wow, that's amazing. John and Mary, let's say, John have 20,000 with us. Mary has 20,000 with us. So
Mm-hmm.
that is $40,000 of RRSP.
Yes.
Okay. So, what are the various strategies that can be employed? Number one is if you're looking to buy a home for the first time, the government has increased the first time home buyer limit up to 35,000 per taxpayer. So if it's a
Yes.
partnership, if it's a husband and wife, for example, right? Then they have access to $35,000 of RSPs if they have 35,000 each.
Yes.
So that is about
Yes.
$70,000 of down payment that you can actually pull from your RRSP without paying a dime of income tax,
Amazing. Yeah. It's amazing.
right? It's
Absolutely.
amazing. So we're going to use a more reasonable number because a lot of folks, don't like to stretch too much. So let's say it's 20,000 each. Then for that household, that's a $40,000 down payment.
Yes.
So that is a good start. Would you agree,
Of
Alex?
course. Absolutely.
Right?
Amazing start.
Right?
I agree.
Now, the most important rule with the government is that money must sit in the RSP for 90 days. Okay.
Mm-hmm.
So there's a 90-day period that they have to wait before they can actually use that money tax free.
Mm-hmm. Mm-hmm.
Okay.
I agree.
Otherwise, you pay the taxes on it. Right.
I see.
And we don't want that to be the case. We want to advise them properly. So that is a very basic idea of the first time home buyer plan. Because a lot of people, Alex, it will take you hundreds of dollars every month for years and years and years, over 10 years, for each of them to actually accumulate $20,000 in deposit if you're just on a monthly plan.
Yeah.
But this way, we're actually able to advance you that money upfront.
Can you let me
Right.
know when you take this RSP as a first-time home buyer as a down payment for your property? What is the time frame that you have to return this money back to RSP?
Good. That's a very good question. So there is a little bit of a misunderstanding with this topic, with this question that you asked,
Mm-hmm.
because a lot of folks think they're actually paying back the government.
Mm-hmm. No,
So
they're paying
all of
back to
the
themselves.
absolutely, absolutely. The government only asks you to pay back yourself.
Yeah.
So you can do it in increments over 15 years. So you have
Oh,
a lot of
nice.
time to put that money back into your RRSP. On the worst case scenario, if you don't manage to put it back into your RSP because you've lost an income, financial status have changed,
Mm-hmm.
marital breakdown, or whatever the case may be,
Mm-hmm.
you could still repay your home buyer plan by including 1/15 of that total amount that you borrowed. You could include that in your yearly income
I
when
see.
you file your taxes. So that's another way of repaying it. I mean, it's not my first choice,
I know.
right? It's not my first choice because as an investment advisor, I love to see my clients build back towards their retirement. Okay.
Yes, of course.
And putting it back in that RSP is a great step to building your retirement. Okay. And when I work with families, Alex, that's not their only retirement savings, just as a part of their retirement savings, because there's other
Yeah,
retirement savings vehicles, tax vehicles, and tax shelters that we can utilize.
of
Okay.
course.
So does that answer suffice for your
Yes,
question?
of course. Absolutely. So 15 in within 15 years, is it mandatory to start in year one, or you have some breakdown? For example, I cannot manage in first year. I would like to start second year,
Yeah.
and then from second to 15 to pay, or we have to pay to start repaying back that money in the year one.
A great question again. So you're required to start making payments 2 years after the tax year that you borrowed the money.
I see.
Okay,
I
so it's two
understand.
years after, and then from that second year, you have 15 years in total where you can spread that payment out.
I see.
Okay, so that's a really good way of actually capitalizing on the program because you're not required in 2 years, to come up with 20,000 each. No, we're not doing that.
I
Okay,
understand.
and I
I
think that's a
understand.
great program. And I think a lot of families that I've worked with and they've experienced the benefits of this program. It's not only on the standpoint of, okay, I'm buying a home and I'm getting the money to buy my home. It's when they file that income tax, Alex. When they file that income tax, they have they have I mean, if you're in a 30% tax bracket, using a
Mm-hmm.
number, 30%
Yes.
marginal tax bracket, and each of the spouses, they contribute that 20,000.
Yes.
That's about a $6,000 increase in their tax credits each. So potentially higher tax returns by 6,000
It's amazing.
times
Yeah.
two, that's 12,000 of additional tax refunds in that home. If it's a case of self-employed folks where they don't usually get a refund, that's about a $12,000 savings in their income tax bill.
Excellent.
So that's
Excellent.
one point. And the other point is since we have helped you reduce your taxable income, now your trillium benefits have probably gone up. Now your GST benefits have probably gone up a little bit. Now, most importantly, most families I know receive child tax because of the level of income, right? So
Mm-hmm.
now, Alex, their baby bonus, or which we call their child tax benefit, have gone up as well.
Oh, nice.
So across the board, we're looking at a lot of tax credits to be taken advantage of depending on the family dynamics, children, spouses with higher or lower income. We will create a rationale around that. We will customize the plan to suit that family. But this is a scenario painting a picture of a family with young kids that are not maximizing on their tax credits.
I understand.
Okay? And pretty interesting there. And if you look at my the points lower down, one of the reasons people do this is paying down high interest debt. Now, Alex, I've seen clients, I mean, and you and I have worked with people where you've seen the credit card bill is over the roof, right?
Yes.
Credit card bills, I mean, after the holidays have passed, that's when a lot of people are distressed because they get those mails.
Yes, of course.
Right? And you see that 19.99% on, say, the Visa or the MasterCard. Guess what? It's a great idea to file your taxes very early. The fact that we've helped you with that 20,000, use some of that money to actually pay off your high interest debt,
I understand.
right? So imagine you're being able, husband and wife, let's say there are credit cards on the table. Imagine you're able to wipe off completely about $12,000 in debt.
Amazing.
And if you're talking about revolving debt, from the math I've done, a 12,000 revolving debt like line of credit and credit card will cost you more than a $30,000 fixed debt.
Yeah, of course, I agree with you. Absolutely, it's
Right?
crazy. Absolutely.
Right? So
And
our Mhm.
I have one question. If you have these funds on RSP and from government, right? This 30% you already mentioned. Um, I understand you can pay down high interest debts to build your cash reserves or to have emergency funds. Can you use these funds on RSP for any kind of investments apart of the real estate?
Absolutely, absolutely. So we're talking about the money they're getting back from the government, right?
Mm-hmm.
Okay, yeah. So let's say in this case it's $20,000. You get
Mm-hmm.
$6,000. So let's say if it was John and Mary, 20,000 each, and it's a 30% tax bracket. We're looking at
Mm-hmm.
about $12,000 of tax refunds. Okay,
Yes.
all things being equal. So that $12,000, a couple of things. One is if you never maxed out on your tax-free savings, you can both contribute $6,000 each as of right
Okay.
now to your
Mm-hmm.
tax-free savings account. That tax-free savings account will build tax-free indefinite. That will build tax-free until you're ready to take that out. There's no taxes. All the growth on the money, there's no taxes. So that's one way of actually reinvesting the tax credits you're receiving from the government. Okay.
I see.
The other way, other than real estate, the other way, because some folks can take that 12, if they don't have no high interest debt, Alex, and they're not
Mm-hmm.
concerned with paying off the RSP loan right away, or they have other plans for consolidating it in the mortgage, they could actually take that 12 grand and put it under mortgage. You could prepay your mortgage, right? You have some prepayment privileges, okay?
Of course.
Now, apart from that, and this goes out to families, if you're listening, families with young children that are receiving child tax benefits, what those families could do is they can open an RESP, a registered education savings plan, and on that they could actually contribute a maximum of 2,500 per year for each child.
I see.
But if they haven't contributed in the prior years, they can make up for those years today.
I see.
So if I haven't contributed to my kids' RESPs in 2021 and 2022, I can do a cumulative amount of $2,500 for each year. So that is a $5,000. So now I have for both of my children $5,000 of RESPs I could deposit one shot in their RESP. No more than 5,000. That's the limit. Okay. So Alex, each child gets $5,000 out of that 12,000. Okay. The tax refunds. So look at this now. The government will come and say, hey, you've contributed $5,000 max. We're going to give you 20% top up. It's called the Canada Education Savings Grant. So now that family gets another $1,000 per child.
Amazing.
That's a grant.
Really good.
So we have used that 12. We have used 10,000 out of that 12,000 to create another 2,000, which is coming from the government complimentary, because you open up an education savings plan.
It's really good. Actually, you got 14,000 at the end, right?
Absolutely. New money, right? New money.
Yes.
Leaving out the increased amount of GST trillion benefits and child tax benefit that you will receive throughout the year, okay, until next July.
Yes.
So
I understand.
This is a really powerful program, guys. If you're listening in, this is really powerful because of the triplicate of benefits. It's not just for a home buyer plan. It has many other purposes around this program. So to clear my point, a lot of folks who are looking for RSPs, it doesn't have to be just to buy a home. It could be for retirement. It could be for reducing their tax bracket. It could be for maximizing their tax credits. Right.
So Mahendra, another question. Let's say that you have a client who he's retired. The person is retired and has $100,000 or $200,000 on RRSP, and definitely needs some financing on monthly basic, like some income supplement. How it works in the sense, if you're taking on monthly basis that RRSP you earned, you put in RRSP funds, and now time came that you would like to take a little bit, for example, let's say $1,500 or $1,000 a month. What's going on with the taxes in that case?
Right. So great question, Alex. So typically, when someone retires, right, what are their sources of income? Usually it's a reduced amount of income in retirement because you're not working as much or you're not working at all. So in Canada, you have the CPP, Canada Pension Plan. You have the old age security benefits. These two combined, the average of those benefits are not a lot of money. I think in the range of $15,000 to $18,000 for the average retiree. The numbers may vary from case to case. I'm just using a blanket ballpark here from what I've seen. Because the average old age security and the average CPP adds up to a little bit over $15,000 for the year. So because of the lower income, you can actually request from your investment company that, look, I only have $1,500 of income right now. I need $2,000 a month to sustain my lifestyle. So I have a deficit of $500, right? So now your investment advisor can help you to take $500 as a withdrawal every month and deposit that systematically every month into your bank. Okay.
I see.
So
I see.
that comes in as an income, which is $500 over a 12-month period is $6,000 of additional income for the year.
Mm-hmm.
Now, the
Mm-hmm.
question is, do I pay taxes on that money? Yes, you do, depending on your circumstances. Okay. So if you've already gotten 15,000 from the government and then there's another 6,000, your income is a total of $21,000.
Yes.
But remember, you're at the minimum tax bracket now. And also,
Mm-hmm.
what a lot of folks fail to remember is in Canada, you have a tax-free threshold, and they've increased it every year over year. I think it's just under 14,000. So if I have $21,000 of income and I'm retired right now, that 21,000
Mm-hmm.
includes my RRSP, or let's say it's even $30,000, which includes my
Mm-hmm.
my RRSP. Okay.
Yes.
I'm not paying any taxes on the first 14. Let's use 14. I know it's a little bit less than 14. It's
Mm-hmm.
going to go up again this year, 2023. But let's say $14,000 is a tax-free threshold, Alex.
Yes.
Your taxable income is only 16,000.
I see.
See? So if someone out there is looking to actually get some great advice on how to plan your retirement, I think that's the greatest thing to do because you want to plan ahead. You
Of
want to know where
course.
your tax bracket is going to be and what the sources of income are going to be. And some folks have income work, they have work income. You have to take that into consideration as well. If someone has a property in the Dominican or they have property in India or South America, whatever the case may be,
Yes.
and they have an income that has to be reported, that may also affect their tax bracket. So we have to take a look at the entire picture and create a personalized game plan around that.
I agree. I understand you.
Right?
Yeah.
Yeah.
Great
Right.
advice. Absolutely great
Great.
advice, Mahendra.
Awesome. Great question. That I love that question. And from the investment standpoint, Alex, we'll show families basically how to invest in this way where you bypass the middleman. Okay.
Mm-hmm.
A lot of folks would say, well, bypassing the middleman, how do you do that? Well,
Yeah, of course.
that is something for another meeting we need to have a chat about because if you don't bypass the middleman, you're actually accepting lower rates on your investments from the institution you're working with.
Great. Great.
Okay.
So
And
this is
that
our
is
next topic for next podcast, right?
next podcast, but I do have what's our time now? I do have a few other slides to share about the accumulation of the funds. It will probably take us 2 or 3 minutes. Can I just do
Let's
that?
show. Let's show. Yeah, of
Yeah,
course.
I'll
Why
just
not?
do that. So that would kind of go on the same topic. So this is an analysis that I did
Mm-hmm.
that let's say one of the first options was retirement. You're not
Mm-hmm.
taking an RSP loan for the sake of buying a home. Let's say you want to retire, you don't have funds built up, and you want to kind of buy back time. I like to put it that way. You want to catch up. Okay.
Yes.
So here we are. We help you qualify for a $20,000 RSP loan, right? Let's say I know there's a lot of fluctuations in the marketplace, but historically we've been able to average for clients at least about 9% return and above. I cannot guarantee anything higher than that, but let's stick to 9% for now. Alex, over a 10-year period, that is an accumulation of $49,027 on a compounded
Wow.
basis.
2.5 times more than
Right?
initial investments.
Yeah, your initial absolutely. Your growth is $29,000.
Yes.
Okay, that's a great investment. Now, obviously, people say, "Well, hold on, I have to pay some interest here, right?" That's how it works. Well,
Mm-hmm.
take a look at this, Alex. If I gave you a $20,000 RSP loan today, and you
Mm-hmm.
got back 6,000 from the CRA, and you don't have any revolving debt right now,
Mm-hmm.
and you take that 6,000 and pay back your RSP loan, how much
Mm-hmm.
RSP loan do you have? What's your balance? Right? So
Yeah.
you're at 14,000, right?
Yes.
So you took the 6,000 tax credit, you pay down the RSP loan from 20, you're now at 14. So now,
Yes.
how much interest would you accumulate on that $14,000 debt? Only 6,739.
Yes.
But in a 10-year, so by the time you would have paid off that loan, you have $49,000 and you have zero balance on the loan,
Amazing.
right?
Very good point.
A very good point, right? And it's so powerful because I've done another chart here to show what if someone who's say 30 years old. I'm using
Mm-hmm.
a random example. 30-year-old John says, "Listen, I want to retire at 65. I know I wouldn't have enough money from CPP and old age security. I don't have a private pension plan. My company doesn't do matching of RSPs, anything like that. What can you do for me?" So here's what we do. We got John a $20,000 RSP loan.
Mm-hmm.
Obviously, that loan is going to be paid off within 10 years because you borrow 20, you're paying only 14, right?
Yes.
Right? So you're going
Yes.
to finish that probably before 10 years. Okay.
Yes.
You're out of debt.
Yeah, of
But
course.
take a look at the balance after 35 years. This get me excited. The balance
461,000.
$461,000. I mean, if you follow markets, the stock markets, the stock markets have averaged more than 9%. And our funds at AGF and Mackenzie are averaging for our clients, in most cases, historically speaking, more than 9%, way more. But I'm only using 9. So we're
Yeah,
looking
yeah.
at somewhere in the 450,000 to half a million mark that someone can be in at 65 with no money down. All they have to do is keep up with a nominal amount of payment towards their RSP loan for a restricted period of time, and the rest of their life is taken care of.
Unbelievable.
All right.
This
And
is
you were
unbelievable.
asking a
This is
question
power of
earlier,
compounding. Yeah.
power of compounding. And I know you asked a question earlier, how do they get that monthly income, right? Now,
Mm-hmm.
if you have $461,000, your question shouldn't be, do I take $500 a month? Based on, the withdrawal rates that are available at retirement, you could probably take way more out of that. You could really live your life and still have that money invested while you're maximizing on your lifestyle, while you're withdrawing every month. The rest of the money stays invested, so it never really dips too far down, right?
I see.
I have a client that invested about $60,000 in 2013. I've shared this example, I think, with you before. $60,000 of RRSPs. We're withdrawing $1,000 a month since 2014. He's
Mm-hmm.
withdrawn more money than he deposited in that account, and he still has over $20,000 in that account. How's that possible?
10 years, almost 10 years passed, right?
Exactly. Power
And
of compounding.
yes.
Power of compounding
Yes.
and having the right people do it for you, the right investment company, the people who have your best interest at heart. And that I cannot take all the credit. We have a great system at work in our company, and I must give them the credit for it. I'm just
Great.
delivering the message here,
Great.
right?
Great.
I'm the
So,
messenger.
Mahendra, next time I would like you to share that
Yes.
real case numbers about the client
Right.
that you can have on insights about
Okay.
amount and
Yep.
to see
Yep.
how it works. And it's really very powerful
Yep.
because
Definitely.
people are I'm listening daily. People are from my friends, my clients. It was not so often like these days. People are complaining that they are barely are able to meet their ends, and
Right.
people are really frustrated and
Right.
looking for additional jobs because everything is skyrocketing the prices from food, from gas. So
Right.
you
Right.
know we are not financially educated in the proper way how to utilize our funds in order to have some more headache-free future. Doesn't matter this
Okay.
future is 10 years from now
That's
or
right.
35 years from now,
That's
but
right.
lack of proper information and guidance is something that we are trying in this
Yeah.
podcast
Yeah.
to explain people and to give some better options to think over. And of course, whoever is looking for more detailed info, you can get in touch with Mahendra or with me. You will have both numbers and contact information in this podcast as usual. And feel free to get in touch with us. And Mahendra will do really custom-made strategy for each person separately because everybody's scenario is totally different story. Right, Mahendra?
That's right. Absolutely. Absolutely.
Great. Do you have anything else to add today for the end of our podcast, Mahendra?
Well, all I have to say, it's been a pleasure spending some more time with our friends on social media. whatever platform you're listening in. And thank you again, Alex, for sharing the podcast with me. And you guys enjoy the rest of your holidays. Have a lot of fun.
Thank you, Mahendra, and looking forward to seeing you very soon with new amazing topic.
Absolutely. Thanks, Alex.
Have a great day. See you.
Have a fantastic day. Thank you.
Bye bye.